The broadcast is now starting. All attendees
Everyone,
are in
thank
listen-only
you
mode.
for joining us for this week's Beginner Circle Weekly webinar. If you guys give me a quick audio check and screen check, you should be seeing my SPX 60-minute chart now and should be able to hear me. So give me a quick yes in the questions box. Let me know you can hear me and see me. That would be great. All right. Okay, so I am Mike G. I am covering this week's Beginners Circle Weekly webinar. We will go over the count on the SPX 60-minute chart in great detail. We will also review the SPX, the ES smaller time frame charts. This video is geared mainly towards beginners, those new to Elliott Wave or new to the site, or just new to investing or trading in general. Any or all of the above. Again, you don't necessarily need to be new to investing to be new to Elliott Wave, and you don't necessarily need to be new to Elliott Wave to be new to the site. So what I like to do in these videos is go over the SPX chart in detail and really see a real world analysis example of how we use Elliott Wave, and which can be beneficial in helping kind of see how the theory gets put into practice. I like to use the SPX chart because it's the most widely followed chart that we have on the site. It's kind of the main chart that we follow here. And again, I'll just go into detail on the 60-minute and 5-minute chart. I'm going to start from the March 2020 lows. This was our last major bottom. And then I'll drill down into the ES chart and go over any questions that you have along the way on the SPX or the ES chart. After we're done with that, we can look at some of the other charts that we are watching, covering the NASDAQ and the Russell 2000. So I'll briefly give a quick overview on those just as they relate to the SPX chart. And then if there's any other questions on the analysis that's been posted by any other analysts in regards to some of the other charts, I'm happy to go over those charts. What I do ask is that you have a specific question on that chart, something that you're not understanding about the actual analysis, versus just asking for a chart review. We do have lots of other services and other videos that are more geared toward chart review. This is, again, geared more towards beginners, how to use Elliott Wave, how we use Elliott Wave to pinball, or just using the site in general. If there are any questions on that on the site use, we can do that, go over that as well. So, all right, so with that, let's go ahead and get started. And we'll, again, start with the SPX chart, the 60-minute chart. And again, I always like to start with the March of 2020 lows, as this was the last major bottom that we had. And it's really kind of driving the action from a larger time scale and giving us the guidance that we're following as we continue to push higher here into the new year. Okay, so starting from the March 2020 low, and even backing up a bit before that, what we had, let me actually pull up the, larger time frame chart and see if I can find it. Yeah, that's it. Okay. So going back to 2018, we had a major top here in September of 2018 in the form of a wave 3. This is a primary wave 3, and we saw a corrective move that pushed us into the end of the year in 2018. This was one of those years we did not get our that traditional Santa rally. We did a really big sell-off in December of that year, in December of 2018, and that bottomed right at the end of the year, and then we saw a fairly strong rally that lasted all of 2019 and into February of 2020. And the interesting thing about this move up off of this low was all of this action was corrective in nature. It was all three-wave action. It was very difficult to count this move. And what ended up happening was this entire structure, we were looking at it as potentially being an ending diagonal, potentially being a B wave. It was very difficult to track this in real time because it just wasn't our standard 5-wave move that we'd be looking for a major bottom. So we identified this as a top of a major wave 3, and this as a potential wave A or potential bottom, with this being an ending diagonal. And then what we saw happen in March of 2020, obviously we topped in this B wave, and we saw a very sharp wave down for the C wave. So this B wave was an irregular B wave. It was an expanded B wave where it exceeded the previous high, or this wave 3. So really the entire move from September of 2018 all the way into February of 2020 was just one large corrective pattern. Actually, March of 2020 was one large corrective pattern. So we were in a basically a bearish market from September of 18 all the way to March of 2020. So even though we were pushing higher and exceeding the previous highs, this was a B wave. It was a corrective wave pattern, and that was what we saw in the SPX, the Dow, as well as the Nasdaq. One of the things that we did see was on the Russell 2000, that same pattern, that same B wave did not exceed the previous highs, which we can see here. And we had that same wave 3 here. We had an A and then an A, B, C from our traditional wave B, which again didn't exceed the previous highs. And then we saw that sharp wave C down. So this was a more traditional pattern. And this was one of the charts that was really kind of giving us a tell at the time that, hey, something's going on the other charts. This top is potentially a B wave. So that was a tell at the time. So that was what we were looking at the time on the SPX, the Nasdaq, and the Dow. And again, so we had this A, B, and then this sharp C wave down. So when we're looking for turning points and major bottoms, the first thing that we want to do is we want to identify a completed pattern. Okay, so in this particular case, what we would need to see for a completed pattern would be an A, 3 waves, B, 3 waves, and then a C down for 5 waves. That completes the pattern, A, B, C. So C waves are always 5 waves, B waves are always 3 waves, and A waves can be either 3 or 5. So in this case, A, B, C. So into this low that happened in March of 2020, because we know this top was a B wave, what we were looking for was we were looking for 5 waves down. Okay, so drilling down into the 60-minute chart here, that's what we saw occur in March of 2020. So we had this B wave top, which we saw in the previous chart. Then we had 1, 2, 3, 4, and 5. So we had a potentially completed pattern here with 5 down off of this high. And when we lay out our fibs on this chart, we can see we played decent fib pinball, and we hit our wave 5 right into the 176.4 extension. So we had a 1, 2, and then we had a 3, which hit the 161.8 extension. We had a wave 4 come retrace up and hit the 123.6 extension. Then we had a wave 5 that hit the 176.4 extension. So again, 1, 2, 3, 4, 5. That's what we're looking for. So we had a potentially completed pattern here. Now, we still certainly could have made another lower low here, and that would have been fine as well. And at that point, we had resistance, which came in right at this 2603 to 2399 zone. So we certainly could have seen another lower low here for another wave 5 deeper. But as soon as we started breaking up over this 2603 level, that was kind of the first indication that we may have put a bottom here in this 1, 2, 3, 4, 5. And then also what we saw here is we saw a fairly clean 5 up off of this low here. So 1, 2, 3, 4, 5. So with that potential 5 up, with the breakup resistance here at 2603, this was the initial indication that we had put a bottom in here in this larger degree wave 4. Because again, we were looking for 5 down off of this high to finish off this C wave. So that was the first sign that we had a bottom in place for the wave 4. This 5 wave up, the first completed pattern, second 5 up off the lows. Okay. So from there, what we do is we lay out our fibs. So we identify our 1, 2, our potential 1, 2, and then we lay out our fibs. And our fibs always go from the start of the wave 1 to the top of the wave 1 to the bottom of the wave 2. Okay, so in this particular case, that top of the wave 1 came in right here at this 2640-ish area, and the bottom of wave 2 at 2448. And then that gives us our initial pivot that we're watching for to give us an initial signal of a breakout. Okay, that initial pivot always comes in at the 61.8 to 76.4 extension of that wave 1. So this is the breakout zone or the pivot zone that we're watching to give us a signal, initial signal that we've bottomed in this wave, all this wave 2. So what we can see happen here is we did come up to this pivot zone. We got some consolidation, we got some retracements, we bounced around in this zone quite a bit, moved up, bounced around, and we really kind of bounced around in this pivot zone for quite some time. We finally started to break back up out of it in spring of 2020 before hitting the top of our wave 3 here at the 176.4 extension, retrace back for wave 4. Then we got another 1, 2, 3, 4, and 5, right up towards the 261.8 extension of this entire move up off of the March lows. And this marked the top of our wave 1 from the move off of March of 2020 lows. Okay, and we can see this is a fairly clean Fibonacci pinball pattern off of that low. 1, 2, 3, 4, and 5. Our wave 3 structure is not ideal. It doesn't subdivide into the ideal wave structure, but our larger degree fibs are really clean. 1, 2, 3, 4, and then 5. This fifth wave itself was fairly extended. This 1, 2, 3, 4, and 5 was fairly extended here. And this final fifth wave of that 5 was also very sharp. But again, larger degree and bigger picture, we really were following fibs really cleanly at the time. So this was a good indication that we were topping out in this larger wave 1. And from there, what we saw is a corrective retrace, and we had ABC for what was at the time we counted as a wave A. And then we had ABC for the time we were counting the wave B. And then at this particular wave here, we didn't quite fill out all of our C wave. So in real time, this counts as A, B, and then we're looking for a C down. And again, the C wave always has to be 5 waves down. So we'd be looking for 1, 2, 3, 4, and 5. We'd also be looking for a push back under the previous low here at the 3206 level to give us confirmation that the C wave had completed. And we didn't quite get that. So in this case, we got a more complex pattern. We had an ABC down as part of the second leg. And when we see those types of patterns, when we get an ABC down instead of a 5-wave move down and the second wave a corrective pattern, we count that as a Y wave, and the entire pattern as a WXY or a double flat. Okay, so that's what we counted this as. So WXY for a wave 2 on a shallow retrace. And then from there, we saw another 5-wave move to the upside here, and then another follow through here for 3, 4, and 5 of a larger wave 1. So this is wave 1, 2, and then 1, 2. So now into February of 2021, we have in place a 1, 2, 1, 2 setup. And then we're looking for a corrective retrace for a wave 2. And this is really when things really start to get confirmation that this market is indeed very bullish and it's ready to continue to follow through higher to the upside. Okay. Now, just like we laid out our fibs down below here on our initial wave 1 down here, we do the same thing here. So we now lay our fibs out from all the way from the March of 2020 low all the way into the September of 2020 high, and then down to the October of 2020 low, which is the bottom of our wave 2. So these are now our operative fibs on the largest time scale, okay, our wave 1. Okay. And so again, we put our market pivot in there, which comes in at the 61.8 to 76.4 extension of this wave 1 and this wave 2. And that came in at the 4101 to 4304 level. And once again, and then we did the same thing after we got this next wave 1 here. So we had our fibs here and our fibs here. So wave 1 and then 2. And in this particular case, we had market pivots overlap with each other. So we had a market pivot here for this larger wave 1 and market pivots here for this smaller wave 1 here, with the 61.8 and 76.4 extension of this wave 1 coming in right in the middle of the pivot of this larger one. So what we can see happen here is once again we kind of bounced around in this market pivot zone for a couple of months, and that ended up being just a series of fourths and fifths, and then another 1, 2, and we bounced around in that pivot zone. We finally broke out of that pivot zone, and which is basically taking us to where we're at now. So we bounced out of that pivot zone, we came back into it, found support, moved up, came back down, found support, moved back up, and now we appear to be cleared of this pivot zone, and we're starting to clear the larger fibs here the 100 extension of that initial move up off of lows, and starting to clear up some of these larger degree extensions here as we continue to push higher into the new year. Okay, so again, Elliott wave is fractal in nature, and we can see that what we do in the beginning of the wave counts down here. There's 1, 2. We lay our fibs out, and we get a full 5-wave structure. Once that's in place, we do the same thing. We lay our fibs out again, 1, 2. Lay our fibs out again, 1, 2, and we just keep going all the way up as we continue to move higher. So 1, 2 here. When that completes up here, we lay another 1, 2 here, and then another 1, 2 here. And now the current fibs that we're using is this one here, 1, 2 here. And so this is how we identify our extensions as we continue to move higher and our targets, as well as our support and our invalidation levels, all using our fibs and our fib pinball guidelines. Okay. So are there any questions on that 60-minute chart before I drill down to the 5-minute chart? And kind of how we got where we're at now, bigger picture. No, the TradeStation doesn't use semi-log scale, so all of the TradeStation charts that Avi or I post are going to be in standard arithmetic scale. Any motive wave charts that I use, or Garrett or Zach uses, or really anybody else using motive wave is going to be in log scale. But TradeStation does not have log scale available, so we use standard arithmetic scale, which is accurate in longer term. But for the shorter time frame charts, it does seem to work. But longer time frame charts, I do like to use log scale on motive wave. Okay. Yes, it is. The fib scale is different. The extensions are different using log and standard. Okay. So the question is, okay, so any other general questions before we get into where we're at with the current count? I do have a question regarding this red count, but I want to see if there's any other general questions about Elliott wave theory and more general Fibonacci pinball, things of that nature before we get into actual current wave counts. Okay. All right. So, from the education material on the site, I mentioned the following. Can you elaborate? Wave A can be 3-wave move or a 5-wave move. What makes spotting corrected waves so difficult? Making the unusual move and counter-term rally tricky to spot. 5-wave A waves make analysis so much easier. It's the 3-wave A waves that can throw you off. Okay, so is there a question there? Can I elaborate? So when you have a 5-wave A wave, it's, let me find one. Here, when you have a 5-wave A wave, like this one here that we got down off of this high, you have 1, 2, 3, 4, 5. That corrective retrace for a wave B. This can be counted as either a wave 1 or an A because it's 5 waves. So because you have 5 waves, it's much more, it's 70-ish% likely that you're going to see another lower low, regardless of whether it's a C wave or an A wave. And at that point, you can lay out your fibs to help give you guidance as to whether that's going to turn into a C wave or it's going to fall through as a 3rd wave. But when you have a 5-wave A wave, then you have a fairly high confidence setup that you're going to push lower for that C wave. When you only have 3 waves for the A wave, what that can do is that can complete the entire corrective pattern. So because an ABC needs to be 3 waves, if you have a 3-wave A wave itself, that could be the entire corrective pattern. If you have a 5-wave A wave and you're looking for a correction, then you know that you have a high probability chance that you're going to see another push another push in the same direction as that 5-wave move versus the potential of it being the entire correction. I think actually we have, that's actually a good segue into kind of where we're at now. So for example, this particular A wave here off of the recent high was 3 waves. So I counted it as A, B, and C for a wave A, or all of wave 4. So this is a real world example of that scenario. So this could have been the entire correction in wave 4, okay, because it's A, B, C, it's only 3 waves, or it could have just been an A wave, still needing another B wave higher to complete before seeing a C wave down for that wave 4. Okay, this is going to answer 2 questions in one. So this is a real world example of that question. Okay, so really we don't know if this is the bottom of wave 4 or the bottom of a wave A until we get a full 5 up off of the low, or we start to break through the standard resistance zone for our B waves. Okay, so the standard resistance zone for the B waves are usually come in at the 50% retrace to, it can go as high as the 88.6 retracement levels. So in this particular case, that retracement zone came in at the 45.95 to 46.83 zone. So this was our retracement zone for the wave B. So until we had 5 up and or we broke over the zone, we still have to be very much on the lookout for this red B wave. Over the zone and 5 up makes this B wave much less likely. So that's the reason for 3-wave A waves being tricky. Now, if this move down would have been a very clear 5-wave move, then we would have known with a fairly high certainty that this was indeed an A wave, not the 4th wave. We're going to get a corrective retrace for a B wave and then push down lower again. But again, because it was only a 3-wave A wave, it could have been all of the wave 4, it could have been just an A wave. Okay, so in this case, again, with what we have is we have a decent 5 up here. I would have preferred to get another higher high here, finish off this 5th wave, but this is a decent 5-wave move. It had good fibs. It didn't have the best structure here for this 4th wave. It was fairly small, but it did have good fibs. So we count this as 1, 2, 3, 4, 5. We did break over the resistance level for this potential B wave, which gives us fairly good confidence that this was a wave 1. Giving us further confidence that this was a wave 1 was the structure into this high here. So we had this A and then B. And again, this is similar to what we saw on a larger time scale back in March, where this top was 3 waves, very clear 3 waves, A, B, C for a B wave. And the next move down is C waves, 5 waves, completing the pattern. When we have a pattern like this, we have an A and then a B wave top, which exceeds the previous high. It's very, very likely that we're going to see another higher high. It's a very, very difficult pattern to top here. So while I still allowed for this to be a red wave B, it's a very low probability. I'm 10-15% that this is still a B wave. It's just very low probability due to the structure of this move up off of the 44.82 low. I do have to allow for it though, because it's really the cleanest count that gets us back down under the 44.82 level, and I have to allow for that as an alternate, although it is a very low probability path. But this entire structure, this 5-wave move plus this 3-wave move up off the low into the highs as a B wave, was very telling that this was going to push higher. And then we saw that corrective move down into the 50% retrace level yesterday, and we are starting to get a nice push higher here into today. So again, my base case is that we did bottom in all of wave 2, with the outside chance that we're still topping in a green wave B, needing a C down for a larger wave 2 here into the support zone. But I'm leaning towards a bottom being in for the wave 2. I still need another 4 and a 5 for 1 and then a 2. But that's the reason for the A waves being tricky when they're only 3-wave moves. And that's the reason why this B wave, I think, is very low probability chance that we're going to see this larger C wave down the run. I think that there's small chance, there's a greater chance we're topping in this green B wave here, but I also think this is a low probability. I'm very much leaning towards the bottom and all of wave 2 being in. Do you want to see a 4 consolidation here tomorrow, maybe into Friday, and then another push higher for wave 1, and then another consolidation for wave 2, back down to around 4650-ish ideally, and then push higher and break out into the end of the year. Okay, so we answered that. Let's see, what's next? So if you believe wave 2 bottom, you wait until price not only surpasses the wave 1 high, but surpasses 61.8, retrace, range 2 with your pinball method, and then saying you can go along set stuff. Okay, so this is the question is, when do you enter? So when you enter trade, there's multiple spots where you can enter, and it really depends on what your time frames you're trading is, how aggressive you want to be, and what your basically what your time frames are and how aggressive you want to be. So generally speaking, the most reliable trade in Elliott wave is trading the 1-2. So again, completed pattern down, and then you look for the 1-2 and you buy the bottom of the 2. And when I say the bottom of the 2, you can scale into the bottom of that 2. So in this particular case, we had an ABC down. So again, A, B, and then C down. This is a completed pattern here. We got a 5-wave move off the lows and a corrective retrace. So what we're looking for on this smaller time frames is we lay out our fibs here, and we look for the wave 2 to come into the retracement zones. Okay. Zoom in a bit so we can see that. And the standard retracement zone for the wave 2 comes in at the 38.2 retracement to 76.4 retracement levels, and ideally holding the 61.8. So this is the standard retracement zone. We can see we hit right in the middle of that. We hit just above the 50% retrace before we broke out higher. Okay. Now the fibs, and this is actually off a little bit. It's not quite snapped right. I do have that there. We hit the 50% retrace almost right on the nose. In fact, okay. And then we pushed higher. Now the pivots, this is confirmation. So this doesn't necessarily mean this is where you can enter. This is just confirmation. So in this particular case, this move up off the lows that was struck on December 3rd, we had our pivot here at the 45.75 to 45.87. So this is the pivot, and moving through this level gave us confirmation that a bottom of wave 2 was in place. Okay, that's not necessarily meaning that this is where you want to enter, but this is giving us confirmation that a bottom is in place. So the way I would actually count, I would subdivide this. I would count this as 1-2 here, 1-2, and then 3. So 1-2, and then 1-2, 3, 4, 5. This wave 3 is how I would subdivide this. Let me just lay it out for educational purposes. So I'd count this as 1, 2, 3, 4, and 5 of 3. So this is how this third wave, I would subdivide this third wave, okay? And what we can see is that that 1-2 hit right into that pivot zone and then got a retrace, and it's fairly shallow. So the wave 2 of the wave 3 is typically a more shallow retracement zone. So there's 2 spots you could have entered here. You could have entered here on this retracement, which hit the 50% retracement zone. And you can scale on. You can start scaling into 38.2 retracement. You get a little bit more of the 8% retracement, a little more of the 61.8 retracement. You can set stops under the previous lows as the invalidation point, or going to be a little bit tighter, you can set them under the 80.6 retracement. So that's the initial entry. Okay, from there, then you can wait for the 1-2 confirmation, so 1-2 and then 1-2, and you can enter here. This is another spot you can enter. Okay, and you can look to scale out as we continue to move higher in the waves. 3 here, wave 3, 503 here, and you're kind of pushing your luck if this is your entry and you're scaling out on your 5th wave here. But again, we're using our 5th pinball, so we had 1, 2. We had our wave 3 hit the 161.8 extension, retracement for wave 4. We had the wave 5 hit the 200 extension. We have our wave 4 retracement again, and our final 5th wave there hit just over the 200 extension for that 5th wave. Okay, we did get a B wave which extended higher, but this was really the end of the wave 1. Okay, so that's in a nutshell how you trade, the best and most reliable trade setups on Elliott wave, and this can be done at any time scale. So this is a fairly small time scale. We're using a 15-minute chart, and it's a matter of days. And if you go back to the 60-minute chart that we showed earlier from the March of 2020 lows, that was a matter of months. So again, so let's just go back to that real quick, and we can see the SPX chart. Going back here, so we have 5 up, retracement for the wave 2, and again, we lay our fibs out, and this one hit. This was a more shallow retrace, so 38.2 extension versus hitting the 50% retracement. So again, if you're scaling in starting at 38.2, you get an entry here, and then didn't quite get an entry there. And then you potentially have another spot to add here on a more shallow retrace. But this entire structure was very, very shallow, the entire move up here, all these 1-2s. But again, you had another opportunity here for this potential 1-2. So 1-2 here, there's a deeper retrace. There's a really good risk to reward. Again, and a nice push up high for the wave 3. And again, you can just keep going, and it just really depends on what time scale you're trading. You have a 1-2 here entry, 1-2 here entry, 1-2 here entry, 1-2 here entry, and then we have another 1-2 here entry. And then what we're looking at now on the smaller time scales is potentially trading that potentially looking for a wave 2 retracement of the wave 3. So we had that 1-2 entry. Now we have a potential entry here, which again, this hit the 50% retrace of that wave 1. Now we're looking for 1, 2, 3, 4, 5. So again, ideally, if we can get a 4 and a 5 up, then we potentially have another entry here for a wave 2. So 1-2 entry, and then that should take us higher for the next leg up. So 1-2s are what we're looking at, and you want to try to go with the trend. That you saw there's multiple opportunities since the March of 2020 low to get in on a 1-2 retrace, and again, those are the ideal and most reliable entries to use. So again, 1-2, 1-2, 1-2. So we got entry here, entry here, entry here, and these are all different time scales that you can enter on. And then as we get more advanced, and as you learn some of the more advanced patterns, or just pay attention to the room, you can see that this particular pattern here was doubly attractive because this move into the lows was an ending diagonal pattern. So this was an A, B, and then 1, 2, 3, 4, and 5. And ending diagonal patterns, what they do is they will usually retrace back to the origination point of that ending diagonal very quickly, more quickly than it took them to get there. So in this case, the ending diagonal originated around 4,700, 4,709. So we had 1, 2, 3, 4, 5 for this ending diagonal, and we can see that the reversal out of that ending diagonal happened really quickly within a week. So after this initial 1-2, this is a really, really good high probability setup to have here, and it made for a lot of good option trades as well because the timing was pretty clear, and you had a 1-2, and you had this ending diagonal pattern coming before it. So this was just a kind of perfect storm of a pattern here, this initial 1-2 off the lows. And it presented itself across multiple instruments, so the ES, the NASDAQ, as well as the VXX. This is a great setup last week to really see the strong push higher that we got into the end of the week. And again, this looks to be developing a nice clean 1-2. And we just need to finish off a 5-wave move here to give us further confirmation that we've put a bottom in all the wave 2. And then, yeah, we hopefully will get another pullback here that's deep enough to give us another opportunity to get long here for this 1-2 of this move here. So again, 1-2s are really what we're looking for in Elliott wave. That's kind of the ideal entry point. And then from there, once we identify that 1-2, we can use our fibs to help give guidance as far as what the exits are, what the support levels are as we continue to move higher. Okay. Is there a standard zone for an expanded beat? No, there's not. It's rare for it to exceed the move as high as it did in March of 2020. It was the largest I've ever seen on that time scale. It's pretty rare, but there's not really a standard. Wave of 5 of 1, not looking clear 5 waves. Which wave 5 of 1 are we speaking of here? This one looks like here. Actually, it ends here. That's expanded B wave. So that's 1, 2, 3, 4, 5, potentially a little ending diagonal of this move there. And that was expanded, another expanded B wave. And when you see when the market's very, very bullish, you'll see these expanded B waves a lot. So in a very bullish market overall, you'll get corrective patterns where the B wave exceeds the previous highs. If we get 5 ups for wave 1, fall back corrective wave 2, pull back in the ES, and the entry is made, where would an initial stop be placed, and where would that setup invalidate? Safeguarded by the breakout over the pivot. Okay, so the stop is going to be, if you get 5 up, the invalidation comes in at the low of the wave 2. So that's 45.94. That said, it's very rare to move below the significantly low below the 76.4 retracement level of the wave 1. So you could put a tighter stop just below the 88.6, but invalidation is below the wave 2. There are times when you'll see a deep retrace and then a sharp reversal, and it's always frustrating to get poked out on a trade on a stop under support. So I always like to use the invalidation levels as a stop. It just, it psychologically for me, it feels a lot better to know that, hey, if I did get stopped out, it was because it invalidated, not because I just set my stop a little too tight based on support. Invalidation of wave 2 is invalidation of wave 2, and that's it. There's no arguing about it. There's no questions about it, and it is what it is. So for me, I prefer to use that level as a stop. It invalidates the pattern, and even if it does spike under that level and move back higher, it's a different pattern at that point. It's not just hey, we got a deep retrace and it's the same pattern. So I mean, for a good example would be today. This wave 2 was deep. This is below the 76.4 extension. So if you would have put a stop at the 76.4 for this wave 2, you'd have got stopped out. Whereas if you put it under the invalidation point for this wave 2, you're still in the trade and you didn't miss this move. So this is a great example of that. So while yes, it's rare to move below the 76.4 in a wave 2, it does happen. And there's times when you get exactly what happened today. You'll get a super strong move after a deep retrace. So again, this is why I personally like to put stops under the invalidation point of the wave 2 and not use a fib support level. Because fib support levels can get poked under, they can move under a little bit, they can get a sharp spike in reverse and still be a valid count. If this would have moved under this 45 94 level, it would have invalidated this 1-2. So if you did get stopped out, it's you psychologically at least I feel much better about the trade versus a sharp spike in reverse like this. What level does green alt C become primary? Green alt C, the dark green C becomes primary if we start to break under 46.45. That's when this C wave down for this larger wave 2 would become more likely. Could you talk a little bit about the MACD and how you use it to determine bottom? So a couple different ways to use MACD. You can look for divergences when you're making lows. You can also use just oversold levels, kind of looking back at where things have bottomed in the past, in the recent past. So let me see if I can find an example of a divergence. here, I think, yeah. So in this particular case, we can see that this, we had a 3, 4, and 5 for the C wave. We can see the MACD here made a lower low and then a higher low here. So while the price was making a lower low, the MACD was making a higher low. Okay, so this is called divergence on the MACD. So this is a good indication that we may be forming a bottom here. In this particular case, I noted this yesterday. We were really oversold, so we had come off from again, this was a overbought level. So again, you can see this, this top right, kind of at some of the key levels that we had topped before. So again, we had a top here, we had a top here, a top here, just below, top here, just below, and we were pretty overbought here last week, which was a good indication that we are likely forming at least a local top. Curled over, and then we moved back into support level, which is the area that we had found support previously. And then we curled up today. So I noted that we were at some pretty deep oversold levels that we had seen some other significant bottoms in the past. Today we curled up with the spike up, so now we've seen this continue to fall through to suggest that we're pushing higher. You guys still hear me? So I'm getting a lost sound. Okay. When you or Avi or others draw blue boxes, these zones are sometimes different. Some use 50, 76, 38 is a typical or standard, most common field level. Is there a list of most common field levels? I think probably in the Frost and Brecker book, I believe. Standard for wave 2 is 38.2 to 76.4. B waves, and it just depends on the previous structure. So that's on a 5-wave move. If you get an A wave that's 3 waves, then that retraces typically deeper. So if you get a 5-wave move, you're looking at 38.2 to 76.4. If you get A wave that's 3 waves, it usually retraces more. It usually traces 50% to 88.6 is the standard. I believe those levels are in Frost and Brecker. It might be in the educational section somewhere as well. I don't know offhand where those levels might be. What do you mean when you say the timing is pretty clear for an option trade? I thought you didn't focus on time. So yes, Elliott wave does not generally have good time projections, with the one exception of ending diagonals. This is when time is actually very accurate with Elliott wave. And I'm going to use the VXX because we actually put a trade on the VXX using this. Let's see if I still have the times on here. I think I may have deleted them. Let's see, I did. Okay. So yeah, Elliott wave is not great at projecting time. The one exception to this is ending diagonal patterns. So when you're looking at corrected patterns, you have A, B, C. The C wave always needs to be 5 waves. Okay, that 5 waves can be either an impulse, where you have 1, 2, 3, 4, and 5, where you don't have any overlap between 4 and 1, or it can be an ending diagonal pattern, where wave 4 overlaps wave 1, and then you get another push higher for wave 5. Ideally, this also falls within a channel. So on the VXX, we had A, B, and then C, and we had 1, 2, 3, 4, 5. Very clear 5-wave move, very clear ABC pattern. Pattern was within the channel, and it was a pretty textbook ending diagonal pattern. When ending diagonals end, they will almost always retrace back to the origination point of the ending diagonal in a time that's less than the time that it took to move from the origination point to the ending point of that diagonal. So in this particular case, the ending diagonal started at 2164. It started on November 29th. It ended on December 3rd, and that was how many trading sessions was 29th. 1, 2, 3, 4. 4 trading sessions to get from the starting point to the ending point of this diagonal. Okay, so assuming that this was indeed an ending diagonal, which should look pretty textbook, that would tell me that this should retrace back down to the origination point of that diagonal in less than 4 trading sessions. Okay. So what that allows you to do from an options standpoint is get fairly aggressive on your timing on options, because if this pattern is indeed going to play out, then you know that it should get back to the origination point. You have a very clearly defined target, which is the origination point, in less time than it took to get there. So 4 days up should take less than 4 days down to get there. So this top happened to be on Friday, December 3rd. So at this point, I actually initiated an option position here right near the top. As we hit this top of this trend channel, I entered that in the VIX service EWT. And we got pretty good fall through towards the end of the day and continued fall through on Monday. We broke through the bottom end of this channel on Monday, and we saw a small retrace for wave 2. And this was really good confirmation, the initial confirmation that we topped in this diagonal. So I was pretty excited about this. And because the weekend premium was pretty high here, we actually had even a better entry in the options here for this wave 2 retrace. And again, we could still get really aggressive on the options, because we knew that if this was a diagonal, which it really looked like it was, we should retrace back to the origination point in less than 4 trading sessions. So as of Monday, that was 12.6. So 4 trading sessions would have taken us out to 12.6. Now the top was 12.3. So we count 1, 2, 3, 4. 4 would have been the 9th. So 12.9, the end of 12.9 was the 4th session here. And our option expiration for that week was the end of the week, which was on 12.10. So this was our option expiration. Our most aggressive option expiration was 12.10. Okay, and so we can see we did indeed hit that target level in 3 days. So 4 days up, 3 days down, and that turned out to be a really, really good option trade, because we were able to get really aggressive with our timing on the options for that particular trade. So the ending diagonals are the one exception when timing really is can be pretty accurate on Elliott wave. 1-2s setups, typically the wave 3 will move quickly, but there's really no clearly defined time that you can use. Ending diagonals are really the only pattern that you have a very, very clearly defined time. Again, the retracement back to origination point on an ending diagonal should take less time than it took to get there. It almost always occurs that way. So if an ending diagonal does indeed reverse, almost always goes back to the origination point, and almost always happens in less time than it took to get up to the top. So those are the patterns I really look out for options trades. They can be huge winners. I think this one ended up being like 10x or 13x at the peak. So it was a really great trade. Okay, sorry, getting off track a little bit. For wave 5s, is there a standard fib level? Because it seems like you'll say just one more high and then can count as wave 5, but there's no mention of fib level. Fifth waves, it depends on where the wave 3 and the 4, so where the wave 3 topped and the wave 4 bottomed. But generally speaking, on indexes, we're looking at anywhere from the 176.4 to the 261.8 is the standard extension of wave 1. But again, it does depend on where wave 3 tops and where wave 4 bottoms. So, for example, right now we're in a very extended wave 3 off of the lows that were struck today. So this wave 3 is already at the 238.2 extension. So our wave 4, assuming we get a shallow retrace, our wave 5 could hit the 300 extension and still be valid. So it could be an extended 5th wave. Much beyond 300 is very rare. Very, very rarely will we see an extension beyond 300 extension. It starts to get beyond the 300, it's usually something else. But the standard for 5th waves is 200 to 261.8 on indexes. Following Nelson in real time, the wave 2s are often not clear until after the fact, and caution is more noted. Alternate paths as a result, keep missing entries or entering too soon based on support waves. Here's a rare here, and I'll say this is a great entry for the factors anyway to cut through the apparent fog. I've been trying to be as clear as possible this last week you know, what my primary count was on everything, right? You know, there are times when we're always going to have alternate counts. It's just the nature of trading. You know, we deal in probabilities, not certainties. But 1-2 setups, when you see a 1-2 setup on the board, it's a high probability count. And you know, it depends on how aggressive you want to be and where you want to put your stops. But that's there's always that setup in place, and you get the retracement into the support zone. You can always take that trade and put your stops in place and at the invalidation point. But when you have a 1-2 setup in place, you know, as the primary count, you know, that's about as confident as we can get. We're always going to have alternate counts. It's just the nature of markets. I've laid out a number of trades in the VIX service the last week based on the count that we've been watching in the past couple weeks here. So if you want analysis and analysts to say this is a great place to enter, then you can give the VIX and index and ETF service a try. And I trade based on Elliott wave only, and we entered the VXX setup last week. I entered some SPX, L, and TQQQ yesterday around this low here. So I entered SPXL and TQQQ around these levels. This setup was actually here. So we were right around here. I entered SPXL here for this wave 2 retrace, right at 50% retracement level. Stops under the low here at 120, 72, and TQQQ was here with a much deeper retrace, but a really good risk to reward. So yeah, I mean, I've been trying to be clear as far as what the setups were, and in the index and VTX servers, I will index ETF and VIX servers, I lay those setups out in no uncertain terms. Okay. I don't have a current count on natural gas. And again, if there's specific question about the analysis, you know, I can pull up the other analyst chart on that, but I don't have it worked up, and we're getting all low on time also. So, okay, I do want to go over quickly the Russell. This has been one of the chart that's very painful to watch. Just been a very sloppy pattern. I'm going to just go over the larger time frame here. So Russell 2000 was a really strong chart off of the 2020 lows and into the early 2021, and then it just consolidated and kind of flatlined. But the pattern's incomplete. Any way you slice it, it's incomplete. I don't know how the best way to count this is. It's just really sloppy. There's a number of ways to count this action from early 21 until current, but it's over bigger. The key point is it's over support. It is corrective. It is consolidation. It is flat consolidation, which was expected based on the sharpness of the wave 2 of both of this wave 2 here and this wave 2 here. So I'm leaning towards this being bottoming in all this circle wave 4, needing another push higher for this wave 5 of 3 into the 25.18 to 29.64 zone before getting a deeper retrace for wave 4 back to around where we're at right now, and then pushing higher again. So once this gets another higher high and gets into this target zone, I will be out of any of my Russell-based positions, because I think we're going to probably consolidate for a while before getting a final push higher in the next couple of years. But the pattern's incomplete. So whether we're in wave 4 or the circle wave 4, pattern's incomplete. We should get another push higher. When it occurs, we just need to see a full 5 up off the lows. We're really oversold on the MACD. On the daily chart, it's the most oversold we've been since the March 2020 lows. And again, just an incomplete pattern, 1, 2, 3, 4. So this is just a very standard corrective flat consolidation pattern for a fourth wave. So we should get another higher high. Support comes in at 1934 on the low end, 2058 on the high end. We break below that, then it signals that we may be in a larger wave 4 here, but I don't think it's going to do that. I really think we should see a higher consolidation here for Russell. Okay. And finally, I will have a question on the DXY, so we'll look at that before we end things. Comment on how the spike up and down plays in the DXY count. You're talking about these spikes here, this action here. That's really the only spikes I'm seeing. This rest today's wide range. It's corrective. So this may be forming a triangle. This may be a B wave, and you get another C wave down for a fourth wave into support. This action is just corrective in nature here. It doesn't look like it's ready to push higher just yet. Could possibly be an ending diagonal for this fifth wave, but I think it's probably more likely forming a triangle for this fourth wave, or forming a B wave top, needing a C down deeper into support for this fourth wave. But as long as we hold over 95.23, still looking higher for this to continue to push higher. This move down off the highs looks more like three waves than five to me. So A, B, C versus could 1, 2, 3, 4, 5, but I think it's less likely. This is too big for a fourth wave, I think. So it looks much more like an ABC down, which is not suggestive that we are starting a C of B down. So we need A and then B. It just doesn't look like the start of a larger B wave down just yet. This looks much more like, and the pattern's incomplete off the lows. We just don't have a complete pattern. 1, 2, 1, 2, 3, 3, 4, 5. I mean, we're not even completed. Even if we count this 1, 2, 3, 4, 5, this is just not a complete pattern, even as an A wave. So we don't have a complete pattern. The start off the highs doesn't look like the start of a larger B wave. It just looks like it wants to continue to push higher. It's just what it's looking like so far. All right, what was the standard target for range for Russell? It's for wave 5, 2518 to 2964. That's the 238.2 to 300 extension of this wave 1, 2 here, because I'm counting this as a fourth. So 1, 2, 3 here, 4, and then 5. So 238.2 to 300 extended wave 3. All right. So we'll go ahead and end things there. Thanks everyone for joining us. Any other questions, please feel free to ask in the room during the week. I'm happy to answer those questions there. Okay, quickly look at the index. And then one things. 1, 2 off the lows, what I'm counting. So ideally another fourth and fifth. Similar to the ES, pivot zone is at 61.8 to 76.4. Get rid of this dip here. So we're looking for a move through this. It's right at the pivot's right at the previous high. So 16,444 is what I'm looking for as a next signal of a breakup for our wave 3 of 3. And then that should ideally push us up towards 17,000 to 18,000-ish is the range. Top of this wave 5. That's the next leg up. I'll post more update on that in the morning. So, okay. Thanks everyone for joining us. Again, any other questions, please feel free to ask in the room during the week. I will do my best to get to those there. Have a great rest of your week, everyone, and thanks for joining us.